You are listening to Call Her Profitable, the podcast where we blend faith, business, and personal development. I'm your host, Odaisha, founder of the Woman of Power Group and certified life and business coach. And on this podcast, we'll explore partnering with God in your entrepreneurial endeavors, uncover your God-given gifts so you can start and grow a business that flows, transform your mindset, and walk confidently in your calling. So grab your journal, sis, that Bible, and your favorite iced coffee as we embark on this journey together. Let's get started. Hey, y'all. Welcome back to another episode of Call Her Profitable. On this episode, we're going to be talking about business credit. And I'm really excited about this episode because as women of power and women of profitability, business credit is going to be so essential to the growth of our business. A lot of us, I know, are struggling when it comes to building out the businesses, struggling when it comes to affording different programs and systems so that our business can grow. And business credit has been such a blessing for me. And I wanted to bring this to your attention because it wasn't something that I was aware of before. I only knew about traditional funding, so getting a loan from a bank. And I also only knew about getting grants, which I've tried to get many grants, but the process was very long and vigorous. But once I learned about business credit, it really changed my world. And on this episode, I got my funding guy, Romon Logan from Logan Legacy, on our episode today because he is, when it comes to business credit, this guy is a thought leader. He is a trailblazer in this area. He has helped me so much when it comes to this area of business credit. So I just wanted to get him on here so that he can honestly expand your mind as well when it comes to business credit. So we got a whole bunch of questions in from the girls through our email that I'm going to be asking Romon. But before we get into those questions, let's start with you, Romon. In 30 to 60 seconds, let the girls know who you are and why you're qualified to talk about this topic.
All right, what's going on? My name is Romon. Like you introduced, I help entrepreneurs, business owners, and investors access business credit for startups for, whatever you may have going on. The past year, we funded over $6 million to small businesses. And again, we're here to drop the gems. Little backstory, musician, former Division I athlete while in school, just learned the banking algorithms, got cool with a lot of bankers, and then, pretty much being the Robin Hood of the banking world, being able to help people, get funding for their company. So it's pretty much it when it comes to me.
Wow, I didn't know that about you. All right. And I was actually going to ask you, what's your story? How you even got into business credit?
I mean, I feel like it's just being inquisitive, really trying to see, okay, how can we fund deals? I feel like the reason why most of us don't get in business or can start business is because we just don't have the money. Funny enough, the first business I wanted to start was actually a car rental company, but trying to get that started, of course, I needed the funds. So this is something I tried to do while in school. I was 18, 19 at the time. And, I'm running track and I'm also trying to start this business, trying to see how to access funding. So, just YouTube University, all these little things. But at the time while I'm in school, learning how to access capital, actually started the business up. Was able to fund myself, was able to fund some of my family members, my friends, and then just from there we just kept on going with it. So that's pretty much it. I mean, I guess you want to say that's in the what you call it in the nutshell. But that's pretty much when it comes to the funding where it pretty much started because we just need access to capital.
So why did you go business credit route and not go like a bank loan or try to get a grant? What made you go that route?
Right. So, I mean, same thing you just said when it comes to traditional funding, how if you're first starting out, right, you're not going to be able to qualify for that loan. You may not understand the different tactics of grant writing or how to actually acquire a lot of funding through grants. So with business credit, I like it because you can access it for a new company. Even if you don't have sales, you don't have revenue, you're just getting started by simply structuring your personal credit. So really learning that, understanding what banks require when you're going for an application to essentially become undeniable. That's the goal. So my whole thing is, okay, how can we pretty much become undeniable. So when we go for whatever it is we're trying to qualify for, we know exactly how to get it.
That's good. So, what's the difference between business credit and personal credit? Because we got some girls that's listening. Like, I hear all that business credit stuff, but my personal credit is bad and I don't like credit and I don't want to get into debt. So, what's the difference between the two?
I'll say before getting into the difference, I'll say the main thing is unlearning to really learn. And the reason I say that is because, we hear so many things when it comes to credit. Credit this, credit that, credit is bad, stay away from credit. But understanding, it is a simple tool of leverage, trying to get something that we need, but we don't have, we don't have 50,000, we don't have 100,000 to start that company. So when it comes to business credit, that's pretty much that tool that we can use to start that company. It differs from your personal, right? Like I said, many people don't want to go into debt, and that's fine, right? However, most business will go into debt to start, whether it's financial, whether it's, not having the right tools, whether it's not having the right, systems, the right teams. But if we're talking about financial debt to start a company, it's different than your personal. We don't understand that with business credit, for example, utilization is not a major factor. If I have, let's say, a $50,000 business credit card, I need to start my business, using that card is not going to affect my credit score as it would my personal, right? When it comes to my personal credit, utilization makes up 30% of my score. So if I'm ever, using and maxing out my cards, now my personal credit score is dropped. Whereas my business credit, banks know that I need that money to scale. They know that I need that money to invest. That's why those limits are typically a little bit higher. Right, they allow me to use it as long as I'm able to make that minimum payment, right? That 1% payment, you're good, right? You're good with Chase, you're good with an American Express, you're good with a Truist, whoever it is. So they know that you need to use it, which is why they allow to use that limit. But it's really just attaining it first, attaining that mindset, number one, and then just knowing the right cards to use, number two. But I know we'll get into it for sure.
That's good. And I that's exactly what I was going to ask you next. What is the mindset that one needs before operating with these high levels of credit?
I'll say number one, when it comes to mindset, is definitely understanding that most of us prior to accessing funding may not have had so much money in your pocket or so much access to capital at once. So, your first thing that may come to mind, okay, I'm going to go buy this, I'm going to go buy that, this and that, because, many of us don't have access to 30,000, 50,000, 100, $150,000 in capital. So when you have access to that type of power, you think a little bit different, but understand that we have to take this, invest into the business. Now, when I say invest into the business, invest into something that's actually going to produce cash flow, right? Cash flow being, it's making us money every single month. Right, because it's good to have the credit, but if you're not putting into something that's going to produce cash flow, like I say, credit is a tool. It's simply getting us from our point A to our point B. It's the vehicle to our destination. So when it comes to the credit, I feel like it's the mindset. Okay, I'm going to actually invest this into something that's going to produce cash flow, because oftentimes what we may see is, let's say that you're in, I don't know, let's say that you're a photographer, for example, and you get access to funding. You're like, okay, I'm going to go buy a camera. I'm going to go update all my gear. I'm going to go, redo my website, all this, the little stuff, but none of that is actually, going to produce revenue like off the strength of, right? How about we invest into some advertising, or how we invest into a team that's going to help us make more money? So it's pretty much knowing how to use it and then where to, put that capital, because again, it's a tool. If we're not using to produce cash flow, which is the ultimate goal, then you might as well not step into that route, if that makes sense.
So for that photographer, because we might have some photographers listening and they're thinking like, hey, I need business credit so I can do my website and I can get new gear, right? What does she need to do, or what information that she needs to be around to cultivate the mindset to kind of think how you're thinking? Because one might not be thinking, let me invest in advertisement. They're automatically thinking about the object stuff.
Mm-hmm. I mean, when it comes to it, as far as like what and where to put your money, the way I've always seen it is, okay, get somebody who's 2 steps ahead of you, meaning somebody who's made the money that you're trying to make, somebody who has the clientele that you're trying to have. Because then when you have somebody that you can model your business after, it's really simple. If they will tell you, okay, you need to put your dollars into this, you need to put your dollars in that, right? It's easy for us to, I'll say, so you only know what you know. So if I'm at level 1, I only know that things that are going to help me around level 1, but somebody at level 5, they can look back and say, okay, yeah, you're doing all this wrong, right? You're optimizing the things that literally won't even make sense at level 2, 3, 4. So I can go ahead and go to somebody who's been where I'm trying to go, ask them, okay, I have this much capital. How should I be using it? Right? They'll tell you exactly what to do. And that's what I did for my business. I know that's what works for me. It might work for somebody else, but just find somebody who's who's been where you're trying to go, and then simply just model your business after theirs.
That's good, because what I heard from you is invest in coaching. instead of trying to just hurry up and just do the shiny stuff. If you don't know what you're doing with the capital, invest in learning and being around people who know what to do with it so that you can scale the business.
No, that's fact. That's facts for sure. I said, you only know what you know. Ignorance, especially in business, is going to be your biggest expense. The things you don't know are going to cost you the most. So if you could just learn from somebody else's mistakes, especially when you're talking about dealing with capital, right? You want to know how to and where to put it. Go learn from somebody who's already been where you're trying to go. And they'll pretty much help you on that. So coaching is big. I said coaching is big for me. I know it's big for you. And I feel like that's the answer for sure.
Yeah, having access to capital has helped me get access to coaching, which scaled my business. Because now I'm able to play at a level that I wasn't able to. My mind is being expanded at a level that it wasn't before. I was stuck in this 9 to 5 rat race. As a woman of God, I have all this faith and trust in God. In the same token, I'm ignorant. I don't have any capital. I can't invest in the business. And this is what business credit allowed me to do. It allowed me to get access to capital, invest in coaching so that I'm able to scale the business in creative ways I never thought before. So I really appreciate that. So we're going to get into the questions because the girls had questions. Okay. When I put that email out about business credit, they had the questions. So we're gonna run down it. The first question is, I'm a new business owner, 5 months, and I'm looking to secure at least $50K in business credit. Where do I start?
So if you're a new business, right, it's number one, I'll say this, it's important to understand the different types of business credit products you can get access to as a new business. So we're going to talk strictly business credit. So we're not talking like grants or anything like that. Number one, so if you're a new business, let's say you're under 1 year, that's going to be strictly business credit cards. Your Chases, your American Express, your Truist, your Key Banks, 0% interest business credit cards are going to be our bread and butter. Because with these specific products, we can get access to them for a new company, no revenue, no sales. However, that will require what's called a personal guarantee, right? So personal guarantee is going to be similar to a cosign. Let's say that, okay, I'm going to the dealership, I'm trying to get a car, my credit isn't the best, so I ask Odaisha to co-sign for me, right? It's the same exact practice when it comes to getting lending for your business. If I have a new business, no revenue, no sales, no history, tomorrow, brand new, just started today, and I'm trying to get access to capital, 50K in this case, the bank doesn't know my business. The bank doesn't, they've never done business with my business. So how can they trust me? Right. I haven't made any financial deposits. I haven't shown that I can file any taxes because, obviously I'm brand new. Right. However, in this case where the middleman, I can help my business. I pay my bills on time. Right. I keep my card balances low. I don't have any negative marks on my credit. So the bank trusts me. If I want to go to Chase and get lending, I can do it personally. If I wanted to go to American Express and get lending, I can do that personally. So what you can do is be the middleman in that transaction. You can be the personal guarantor for your business, aka the cosigner, where the bank knows me, they trust me. And if I'm coming to the bank, say, hey, bank, look, this is my new business. I know you guys never met, but I know you trust me. So if you trust me, you can trust my business. So that's how you're able to get access to capital for new companies. Like I mentioned, just last month, we funded $840,000 to businesses that were under 3 months. So using that same exact strategy, you're the middleman for the business. Now, it's going to require that you get your personal credit up, but we can talk about some softwares that you can use, like $17 a month to help fix your credit. But for those cars, brand new business, that's going to require your personal credit. There's no way around it. That's how it is, especially when your business isn't producing cash flow. It's just like, if it's like a service based, is this like a product based business? Are they selling products to buy inventory? Or are they, do they have like a service?
She didn't mention, so we just gonna.
Okay, yeah, no worries. So let's say that, even if it's a product or a service based, but you are first starting out, you're definitely going to want those 0% interest credit cards, which you can get with the person guarantee. Like I mentioned, we had somebody, 2 weeks ago with a 3-day company that was able to get a 50K Chase card and simply just using that strategy. So it's getting your personal credit intact, being the person guarantee from your business in the bank. Just because you're the person guarantee does not mean that card is going to reflect on your personal credit. You're just simply co-signing for it. Remember, we use business credit to keep all transactions off of our personal credit. Whatever I do under my business isn't going to affect my person in this case, unless you default on a loan, you decide to stop paying it back. But I know that's not your audience. That's not us. right? But unless we decide to stop paying that, it's not going to affect our personal credit. So that's the best way to go about it. 5 months is more than enough time to be in business to still get access to 50K. That's nothing. Like that's nothing. That's one card. So for sure, it can definitely be done.
This is a good segment into another question that we have. But before we get there, this is all about business credit, but I want to touch a little bit on personal credit. What are three things that someone can do to get their personal credit in the right standing so that they can leverage that to get business credit?
For sure. So when it comes to your personal credit, understand, and this is coming from the bank. I was talking to my Chase rep last week, right? Understand that your personal credit is going to be the utmost important factor when trying to acquire funding for a business. Yes, you can have your quote unquote, you may hear it online a lot, like EIN based applications. The thing about that, right, when we're talking about an EIN application, not using that social security, is most of these are fintech banks. Most of these are charge cards, meaning they're meant to be paid in full every month. You go to a Chase, you go to an American Express. If you want to exclude your social security on their applications, it requires at least $1 million in revenue or $1 million in a bank account. So I know that's not going to be most of us starting off. So our social security, aka our personal credit, is actually the utmost important factor. So when we're trying to build it out, I'll say first things first is you want to know that it's going to be about the report more than the score, right? Report, score, two different things, but it's important that we know the difference, right? Because oftentimes we hear, okay, look, yeah, I have this 700 score, I have a 750 score, I have this, and we go to apply to, let's say, a card. We try to apply for our first credit card. We try to go apply for a business credit card and we get denied. And it's because, yes, we may have a high score, but we don't have a strong report, right? So what does that mean when it comes to high score, strong report? Understand that your score, I wish I had like a diagram, whatever, but it's broken up between 5 key categories, right? Payment history, utilization, credit history, credit mix, inquiries, right? Your score ranges from 300 to 850. So those 550 points in between, it's pretty much up to you to see how high that can go, right? So if I can have a 700, 750 in the matter of 6 months, 8 months with one singular credit card, because all I'm doing is making payment history and I'm probably using for gas. We hear there's a lot of use for gas, use it for small transactions. Cool. So how does that help my score? Number one, if I'm just making payments on time, that's up to 35% of my score, 192.5 points. So that score is going to be high, naturally. If I'm not using a lot of my card balance, aka I'm keeping that balance low, that makes up 30% of your score, 165 points. So those are the two highest key factors of that score. If you're simply just making sure they're in good standing, the score is going to be high. Like you're going to have a 700, you're going to have a 750. You can get that with one card. Now, does that mean that you are, banks can trust you? Not necessarily. Like, this is when we get into the report. The report is everything that makes up the score. Especially when we're trying to go for lending, it's important to know that you want to have as many positive accounts as possible. Accounts are simply anything that you're making payments on. So that's your credit cards, your student loans, your mortgage. Like, yes, student loans can help you in the funding process. I get that question a lot. But like anything you're making payments on, any loan, any student loan, any credit builders, just positive payments. You want to have a strong report, not necessarily a high score. Strong report meaning, okay, I'm able to show I can pay back multiple lenders at once. Because remember, the bank is in the business of protecting themselves. That's why they require a social security application. Because if you default on your business, they need something to pretty much back that application, right? They need collateral for that application. So strong report over high score. But you want to think of it like this. Your score is like your reputation, where, for example, me and you are cool, right? We're cool. We can trust each other. Right, we're loyal to each other, but you may be the only relationship I have in this entire world. The rest of the world may not even know me, right? So that's kind of like your reputation. As if, for example, you can have that one Discover card. I have that one Discover card. I've had it for years, but that's it, right? No other bank knows me. Chase doesn't know me. Truist doesn't know me. American Express doesn't know me. KeyBank doesn't know me. So yes, I can have a high score with just that one card, but that doesn't mean that I'm lendable to everybody else. Remember, banks want to know that they can trust you. How do they know they can trust you? You've shown that you can pay back multiple people at once. So that's when you get into the report, right? Having a strong report, like I said, it's like your resume, where if I have a strong resume, I show all my soft skills. I've shown my experience at multiple places. I've shown that I've been able to move up and a different place, like even if like community service, you want to throw that in there too. Having that strong resume, that's going to help you get that better job, right? If I know that I'm trying to get, let's say I want to be I don't know, let's go big, a C-suite level executive at Tesla. I'm not getting that job if I've only shown that I worked at, I don't know, somewhere for 6 months and that's it, right? That I've only worked at, let's say, I don't want to say like this, but let's say I worked at my dad's coffee shop for 6 months. That's my only experience anywhere. I'm not getting that C-level, right? That CC level job. So it works the same way with when you're trying to build our credit. You can have that one card for 6 months. You get that 700. But that doesn't necessarily mean that you qualify for a $50,000 card because you just have a high score. I know that's a long answer to a short question, but I hope that that makes sense all in all.
Yeah, that was powerful. I love that breakdown. I know there's going to be so many questions after that. I don't even want to pull back the layers because we can, and I want to have enough time to answer all those questions. But I think that you answered that very thoroughly and gave a lot of impact and information for somebody to take from this. So somebody else said, do you just walk in the bank and request it?
I mean, when it comes to funding, it's important that you build a relationship out first, right? And by relationship, I'm talking checking account, savings account, any type of account, right? I could put it like this. I'll try to how can I break this down? How can I break this down? All right, cool. I'll put it like this, where if I have a best friend, right? We've been cool for, going back to the same example, but we've been cool for years. We're loyal to each other. We can trust each other. Would it be easier? Let's say that my goal is to get $5. I'm trying to start a lemonade stand. I want $5. Would it be easier to borrow that $5 from my best friend that I've known for years, even months, trust each other? We're locked in. Or would it be easier to get that same $5 from a stranger on the street? I go outside, go pick a random person. Hey, I need $5. Do you have it or not? Right? It's always going to be easier to borrow from that friend because they know me, they can trust me. So it works the same way in banking. It's called your internal score. If we get technical, your internal score is, okay, how many accounts do you have with us? And the more accounts you have, the more deposits you've shown. We're more willing to lend to you versus a random stranger. So some banks, you don't want to just walk in. There are banks like KeyBank, Truist, where you can't even get lending from them if you don't already have a checking account for 30 days. So depending on where you're going, it's important to establish that relationship first. So get the business checking account, right? If you're going to get the business checking account, you want to get with a bank relationship manager. Bank relationship manager is going to be there. This is going to be your best friend in the process, right? This is going to be the person that's going to walk you through step A to step Z, whatever, right? The bank relationship manager is your person. If you're going to walk in, you're going to go into branch, you're going to need someone like that, right? Who can help you with your application. So make that checking account first. Give it, 2 to 4 weeks. Then you want to go back in branch to apply, you apply with your bank relationship manager. A lot of people go wrong because they try to do applications on their own, not necessarily understanding how the process works. Let's break down another analogy. My goal is to, Odaisha, what's a school? Harvard, right? My goal is to get into Harvard Law, and I'm doing my application, right? And I submit it. And, of course, an admission officer, they read it, they either let you in or they deny you, they decline you, right? However, if I had, let's say, Harvard Law's, if I had their best professor write my letter of recommendation, and then the admission officer sees that, they're like, oh snap, whoa, they had them write the letter. I need to look more into their application, right? It works the same way with banking, where if I do the application my own, let's say online, you're just leaving up a chance how much you could receive, how much your approval odds. But let's say you have that bank relationship manager where they are that person, they are that professor who writes your letter of recommendation. Now they can't automatically admit you, but it definitely weighs in your favor when they're trying to submit your bank application. So if you're going to go in branch, have them do the application with you, and then your chances of approval is much higher than you doing by yourself.
So are you that professor? Because Romon has his business where he's helping so many small business owners obtain a lot of funding. So I'm curious, would you be considered that professor?
I guess you can say that in the case. I'll say I'm the person who can connect you to the best professors. I'm no bank relationship manager myself, but I say I have over 15 who I work with. So pretty much nationwide, whatever capital you're trying to receive, they're a phone call away.
So for you, right? My question is, when people are working with you to get access to capital, what does that look like? So right. It's not like they don't have to walk into the bank themselves. Is it you just do the work? Like, what does that look like?
Yeah, everything is done for you. We just have initial onboarding call. trying to see how much you're trying to acquire. Of course, if you qualify for services, but onboarding call, we walk you through, okay, this is what we'll get done for you. Get you in contact with our bank relation managers, and they pretty much do the applications for you. Pretty much walk through, done for you service. But yeah, I mean, we do the funding for you. We're actually investing in software right now where you can pretty much track your progress throughout. It's kind of like if you file your taxes like TurboTax before, how you can see, okay, what your status of your tax return is. We have that coming soon, but pretty much all done for you services.
So with the people, so let's say I come to you for funding, which of course you know that I have. I'm being funded. Is it off the strength of your relationship with that bank or a bank branch manager, or is it a lot of other factors as well?
Right. So I'll say number one, you definitely want to put yourself in that qualified position. Like I said, really building out that resume, like we talked about, really building out that credit report. That's first. I mean, I can send you some free trainings or whatever if you want that for everybody. But just really knowing how to structure that report first. That's one thing, because yes, you can have that bank relation manager, but again, like I said, they're not the person who can admit you into that school, meaning they're not the person who can approve you for that card. You really just want to be in position, get yourself in a solid position. Now, I will say we've had people where they were on the fence, but having that bank relation manager definitely did help them get approved, whether it's 50,000, 75,000, whatever it was. But definitely get in position first. Number two, you want to know that you have and you are in good standing with that bank. Now, this will vary. Of course, this is where having a good bank relation manager can come in play. For example, let's say in the past you've had an overdraft, you had bankruptcies, you had certain collection accounts that were never paid with certain banks. Larger banks like a Wells Fargo, Bank of America, US Bank, Chase, they can be a little petty. They can definitely deny you for like back stuff I've seen from 2011, 2012, people denied this month. So having a good bank relation manager can definitely get you past that, because you have your underwriting. Your underwriting is like they are those admission officers. They are the people who are reading the application, who are saying, yeah, we can get them a card. Oh, wait, I see you had a $2 overdraft from 2017. This is something that's happened before, and they were denied for that. So having a good bank relation manager definitely can help you with that. But yeah, pretty much those two combined, like I said, having a strong person report, creating that relationship like we talked about, and having a good bank relation manager to help you and walk you through the process, it's pretty much undeniable, to be honest.
And of course, if you don't feel like doing the relationship building yourself, which you should, you got Romon here to help you with that. So the next question we have is it wise to apply to multiple places for it? And what banks do you recommend?
Okay, so apply to multiple places. I guess talking about stacking. So stacking is essentially knowing where a bank is going to pull from. By pull, I mean which credit bureau will they give you an inquiry under. Like I said, when we're going for business credit cards, they're going to use our personal credit. There's literally no way to get around it. So, we have our personal credit bureaus, Experian, TransUnion, Equifax. Depending on which bank you're going to, they're going to take a peek at each one of these, or one of these bureaus. For example, you go to a Chase, they'll look at your Experian. You go to a PNC, they'll look at your Experian. You go to a Truist, they'll look at your Equifax. You go to a Bank of America Business, they'll look at TransUnion. So every bank isn't going to look at each bureau. So you can have an Experian score that is higher than your TransUnion. You may want to prioritize banks that pull from Experian. You may have a Equifax that's higher than your Experian, so you may want to prioritize banks that pull from Equifax. When you're trying to do this, it's important to put a few. There are rules banks have. For example, we can talk about Chase, where they're going to pull from your Experian credit report. I like to go to them first because, number one, they have the most capital, and typically the person with the most capital has the most to give. If you want to put it like this, where your goal is to get that same $5 we talked about for that lemonade stand, is it going to be easier to get that from a bank that has $10, or is it going to be easier to get it from a bank that has $10,000? Right? It's obviously going to be easier to get it from the bank with $10,000, because that's a very, 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 very small percentage of their overall reserve. So a tool that you can use when you're trying to see, okay, what bank is going to give me the most off of the amount of capital that they have, is ibanknet.com, right? With ibanknet.com, they pretty much show you banks in the nation rating on the number of assets and deposits they have. It's good to use this tool because, again, banks that have more money are going to be more willing to give you larger amounts of capital. This is what they call exposure rates. They can only expose you to a certain amount of credit based on the amount of money that they have, right? So you can use iBankNet. You see banks like Chase, number one, 3.5 trillion as of now. They're going to give you more than, let's say, American Express. Even though they're highly talked about, they have around 180 billion right now. So it's night and day compared to how much they can give you. So you can use iBankNet. You can put together what's called a sequence. You can pretty much put those top banks together, and you probably get more money from them versus the banks at obviously at the bottom of the list. So that's a tool I like to always use. And of course, start with the banks you have relationships with as well. If you have a relationship with Navy Federal, meaning you have that car there, you have your auto loan there, you have your checking account there, see if they have lending on the business, which they do. You can also go ahead and call the number and ask for a bank relationship manager, so any branch near you, and ask them how much they can give you in lending based on their exposure rate. For example, you call Navy Federal, and like any branch nearby, it doesn't matter which one. I can call, ask for a bank relationship manager, say, hey, how much could you guys give me on this Go Business credit card? Well, the Go Biz credit card is what it's called. They'll tell you up to $25,000. So, okay, I can up to $25,000 there. But let's say I call Chase and I say, okay, I'm looking at your Chase Inc. cards. How much can you guys give me? Yeah, we can give you up to $150,000 because obviously they have more money. So then that's something to also consider as well. But I like to say it can be a long, tedious process, but definitely starting places you have a relationship with, and then also going with places who have the most money. That's pretty simple. Yeah.
Hey sis, I'm going to go ahead and put a pin in this part of the interview so it's not too long. And we are going to reconvene next week with part 2. I hope you enjoyed. Hey sis, thanks for tuning in. If you found any value in today's episode, I'd love to hear from you. Please take a moment to leave a review and share the podcast with a friend. Together, we can empower more women to walk boldly in their faith and business. Until next time, stay profitable.